Hello, it is another week in the books. This is Rob, joined by Ankit Sharma. This is the Currency Room. We are now looking into the second week of October. The first week of October was awesome. What a great trading week, and I hope it just keeps going. In this session, we're going to talk about what happened in the week. We're going to look through all the currencies. We're going to score everything from +3 to -3, and that's going to tell us what to pair up. We're always looking to pair up the strongest against the weakest. Those are our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
All right, let's start off with the equity markets. So the equity markets had a pullback. On Monday, Tuesday, Wednesday, Thursday, and then on Friday had a little bit of a jump. We were still down for the week, but we'll take a look at the charts. It was a very, very shallow pullback. Definitely what you see in bullish markets. We had a lot of things happen this week. We had the war over between Europe and now Hezbollah, and now with Iran, start to get a lot more complicated. And there was some worry that Iran is going to be striking against oil facilities that Israel is going to be striking against Iran's oil fields, which caused the oil markets to spike up. And you can see the oil market has spiked up. It's basically just putting some more tension in the market. So whenever there's a worry in the market has a hard time really taking off and going higher. We saw on Friday a much better than expected job reports. So the dollar jumped, bond yields jumped. There's a lot of things moving. And cryptos had a pretty big pullback this week, but they are showing some bouncing activity at the end of the week. As far as the economic news goes, we had a lot of economic news. It was the first week of the month, and we know there's always tons of economic news. Let's start out with the top, Chinese manufacturing. So there has been a little bit of a rebound in China, and the central bank in China, they cut rates. And take a look at some of these stocks in China. I mean, take a look at these runs that we've seen over the last 2 weeks, really big runs. So the market is starting to think that possibly China is turning, which we know is very good for the Aussie and the Kiwi typically, and also for the world economy. We also heard from Chairman Powell on Monday. He was less dovish as the market thought. The market was going into this week thinking there was going to be 3 rate cuts, and during the week they pared it back to only 2 rate cuts for the rest of the year. Then we got reports out of the U.S. ISM manufacturing was a little weaker than expected. The market didn't care. But this was the first sign that we were getting stronger jobs numbers. So the JOLTS job openings, you could see, were above expectations. And then we got ADP above expectations. On Thursday, we got weaker than expected inflation out of Switzerland. This should put some more pressure on the Swiss franc. We'll take a look at that this week. This was the number that I thought was the biggest number this week. Yes, I know the payroll report was big, but the market has been a little bit worried about economic growth. The ISM services number is 2/3 of the economy. Take a look at that beat. 54.9 versus an expectations of 51.7, 51.5 last month. This was the number where I said, oh my gosh, I think this market is likely going to go much higher significantly. And then we got some great news on Friday as far as job goes. Everything was better than expected. Everything was hot. So whenever I use the term hot, it means that the Fed wanted it to cool down. And this number was actually pretty hot. This is much better than expected. Another reason why the markets moved the dollar higher and bond yields higher, because now they think there's less chance of aggressive Fed rate cuts. Ankit, what did you think about the move in the bond market this week?
Hey, Rob. Well, I think the bond market was kind of moving along the lines of this better than expected numbers. I mean, we've heard We've seen the data. We heard from Fed Chair Powell earlier this week, where he indicated where the employment data is definitely more up revisions and better than expected. So I think the bond market, if you look at it, they were kind of moving ahead of it in that direction, and then these numbers really confirms it. So the biggest thing I think is that the expectation. So the before this announcement, before the report came out today, markets were still expecting like 32% chance for a 50 basis point rate cut. Now, right after that report came out, I mean, it dropped down to like 7%. So I think the markets were still staying on course. There was a bit of a disconnect where the expectation for a bigger rate cut was still there, where the data was pointing the other way. And I think now we just kind of matched up on both directions here. So I think it's a bit of a delayed price action. I mean, even with the dollar too, dollar only made a big turn like in the middle part of the week, where everything else started to turn early part of the week. So there was a bit of a disconnect, but I think everything else sort of ended up lining up together here, which again, I'm not surprised that the numbers are better than expected. I think we got a hint from Fed Chair Powell and the economic numbers that this will be better than expected.
And if we just take a look at the headline numbers, it doesn't really tell the same story, because if you take a look at equities, you can say, oh, equities were flat this week. If you just were in a coma and you woke up and you just saw that equities were flat this week, it definitely did not tell a huge story, because the market, I feel like this week had a lot of things thrown against it. We had all this overseas tension. We had some Fed speak. There were some things that really could have taken this market down, and it held in pretty well. As you can see, the cryptos, they took it pretty hard. Again, gold has been kind of inversely correlated here. Gold keeps moving higher, which kind of pushes crypto down. And then take a look at oil. Oil was just a huge jump off of those tensions. If we take a look at the S&P chart, I just want to focus here on this last 5 days. So the last 5 days, you can see Monday was an up day, Tuesday was a big down day. But take a look at all of the candles this week. Every single candle had a long lower shadow. A long lower shadow that tells you that at one point, the sellers came in and it was rescued. And it was rescued. Every day the sellers came in and it was rescued. This is telling me that there's pressure on the market to sell off, but there is support underneath it. And until there is a big red candle like we kind of saw here, like you can see that there was kind of telling us, hey, there's support underneath this market. Whenever you see these long lower shadows, it's telling you there's support, there's support. This here, well, if this turns out to be a nice green candle, maybe this is a little bit more bullish, but look, I think we are likely to go challenge the all-time highs. Here's the thing, there's not a ton of velocity at the moment. So I think if it does get through this high, I think it's not going to be a big explosive move. I think it's just going to be a grind through the number, not a lot of fanfare, and we go higher. Now we take a look at what happened in the currency market, and holy cow, this is a totally different story. These numbers are fantastic. Remember, most weeks we do this, we come together, there's one, maybe two currencies that had more than a 1% move. 4 currencies had a 1% move or greater, and one currency had a 3% move, and 2 had a 2% move. This was a great, great trading week as long as you were trading the right stuff. We talked about dollar yen, and we really talked about yen last week just being a really good setup on the short side. So great job to all of our traders who were short yen. And again, dollar was great, CAD was great. I mean, CAD was simply highly correlated to the dollar. But we take a look at outside that, and the Aussie was the next best performing currency. If we take a look at the outliers here, the Kiwi should have had a much better week, but it started the week off with some banks that came out and said, we're forecasting a 50 basis point cut in the next meeting. The market was not expecting that. So the Kiwi had to be repriced and was weak all week. The Swiss franc, this is the currency that is in my crosshairs this week. That weak inflation report, I think this is going to be a good chart to take a look at. But again, just great movement across the board. And look, this is great movement too. It was just on the downside. But you can see Bitcoin held in better than everything else. The equities are kind of just floating around here, but the rest of the market is going wild. And that's much better because If we went back to 2023, the stock market was going wild and the currency market was pretty dull. Now we're getting the exact opposite, which I absolutely love. Here's the bond market, and this is what Anka was talking about. We came up here, we based, and then we took off these last 2 days, and all of a sudden, we're back into ranges we haven't seen in months. So this is one of the big reasons why the dollar has strengthened, because the bond market is no longer taking, a really aggressive Fed into rate cuts. Here is our crypto basket, the 4 cryptos we trade equally weighted. We came up, we failed miserably at that breakout, and we had a big pullback. Where does this leave cryptos? Moving averages flat. It does not tell me I want to be anywhere near crypto at the moment. Back here, I was very, very impressed. Hey, if we can get a breakout here, I'll absolutely get interested in crypto for a run to the next level. It did not happen. So because it did not happen, there's no reason for me to look at cryptos here. Next week, we've got the RBNZ. Now, there was again, tip of the hand that there was going to be a 50 basis point cut, and so the market has readjusted to that. That is now the expectations of the market. Next up, CPI out of the US. Now, inflation is no longer the big story. For the last 2 years, I feel like all we've been talking about is inflation. Now, from 2010 to 2020, we hardly mentioned it at all because it wasn't an issue. Right now, I just don't think it's an issue. I think economic growth is more important. So yes, we're always talking about CPI, how important the CPI is, but that's just because the last 2 years it has been very important. I don't think this report carries all that much weight. Now, if it comes out super hot, so let's say it comes out at a 0.4, yeah, the market's going to worry about that. But if it comes out, 0.2 and 0.2, the market is not going to care. It's still well within what the Fed is looking for. We have GDP out of the UK. Now, the pound was a little weak this week because their governor came out and started talking about rate cuts. It wasn't expected that the Bank of England was going to cut rates, and now their governor's talking about possible rate cuts. So we'll take a look at the pound. But if this report comes out weak, I think you can also put the pound on the potential short watch list. And then Canadian employment on Friday. So again, another busy week here. So I think we're going to have lots of opportunities for lots of good trades. Like I said, I love the currency market volatility right now. It's been hit or miss for me this year, but this is one of those periods I am super into looking for setups. So let's go take a look at things. All cryptos were down across the board last week, but I want to just focus on the technicals. So let's just look at technicals alone. There's only one crypto that held its 50-day moving average, and that is Bitcoin. And Bitcoin had also broken out above its last previous high. So its last previous high was back here. It broke out. It didn't hold it for long. This pullback takes it down into this area. So I think we can take a look at this and say, okay, if there is any crypto here that looks worthwhile, it's Bitcoin. The problem is trend score is a 0. I do not take trades if trend score is not at +2 or -2 or better. I just don't. That is my rule. So while I like how it's performing, it's not ready for me to trade yet. But when we take a look at all the rest, Bitcoin Cash, it's garbage. Below its moving average flat. Ethereum, same thing. Moving average totally flattened out. Litecoin, same boat. So for cryptos, I'm not looking to be a buyer in cryptos at all. However, I am watching that Bitcoin to see if it can actually put together some bullish price action. All right, Anka, take us through the Forex.
Absolutely. Well, let's just start with the good old mighty dollar. And I must say, this is a turnaround week. Why a turnaround? Because, we have seen big shifts in some of the trend scores. Let's just start with the dollar here. You can see the dollar was staying in that dump here. Going into this week, this thing was still very weak. So here we are, going from a -2 now to a +2. So that's a big turnaround here. last 5 days consecutive day up, and I think that's just great way to end the week. So now we are in the situation where any pullbacks likely to be bought, which is the opposite of when we see things are going down, we every rally is getting sold. So I think at this point we are in a good spot here. I would love to see a bit of any shallow pullbacks, any sort of base here. I think will be a good opportunity to get long. With this repricing that we are seeing across the board, I think there could be a little more room for some of the dollar crosses to run. Now, on the other hand, the Japanese yen, you can see this thing has been a roller coaster. And I know some traders love this volatility and some traders were not enjoying the volatility because, again, yen has shifted from being a one sided trade to now a two sided trade. In the last month, we have seen big moves in both directions. So here we are just looking at the direction here. One of the things we talked about is the positive and negative correlation, and dollar and kiwi and the yen right now they're a bit of a the correlation are on point. As the dollar strengthens, the yen weakens, and vice versa. So you can see that as the dollar has broken out, I think the yen is going to weaken here. A lot of the volatility around their newly elected prime minister and their new finance minister, everything's sort of calmed down a little bit here. So everything's kind of going back to the carry trade. And again, at where we are right now in the dollar and the yen, I think there's further gains likely ahead in the coming week. So overall, I do like yen on both on the downside here. The only time I would stay away from the yen is if there's a risk off sentiment, meaning that if the market pulls back. But outside of that, I think this currency likely heading lower. Now, Swiss franc, Rob, I know you talked about it, and I must say that Swiss franc is one of the most annoying currency right now for me because it just doesn't seem to follow any sort of correlation. We have seen risk off environment, we have seen risk on environment. The Swiss franc is kind of running on its own, so that's why I've kind of given a zero score. Velocity is kind of going back and forth, but really pay attention to the zero score. It's not really a great currency to go long or to go short. Now, if you go take a look at the euro on the as its counterpart, you can see that euro a slightly better price action, but this is still in this bear rally formation. If you know, I talked about this last week as this nice trend that was breaking lower, especially on some higher time frames. So at this point, I still want to be on the short side of the euro. The fact that we are getting lower low, we're breaking lower low, and I think this rally likely to be short lived. So euro, I still like it to the downside. Right now, velocity is not there, but we've seen this how things go in phases. Right now, it's all about the dollar, it's all about the yen, and then it shifts to other currencies. So as soon as the focus go back on the euro, I'm on the sideline, but I don't want to buy the euro. Definitely want to sell the euro on the rallies. Now, the British pound is the one that really got traders caught off guard. As Rob talked about earlier, they hinted a rate cut, and then we had a big move down, and then you can see that move is completely retraced. So the question is that where do we go from here? Well, right now, this is a good sign that the buyers came in and bought the euro. So until or unless we really get anything materialize from that, I think the pound's going to be more on the outperforming side than the underperforming side. And especially if you compare to the euro or even this, there's definitely an outperformance there. Now, another big turnaround currency this week was the CAD. And, we can talk about correlation with the dollar, or we can talk about that big jump that we saw in the US oil, which is about 10%. But overall, you can see that the dollar and the oil and the Canadian dollar kind of looks very similar. So again, big turnaround currencies. So these things have been trending down, especially the CAD has been trending down. There's a nice little boost here. I know they're still expected to cut rates in the next meeting. Again, one thing we have to kind of now see is the Bank of Canada going to go for that big rate cut, or are they going to be held back because the U.S. is going to be shifting from not doing a 50 basis point rate cut? So I think for the shorter term, CAD definitely looks better here. So any pullbacks, I want to be a buyer of that. Now let's talk about the Aussie because I have a lot of chat with traders about the Aussie, and one of the things that we saw this week as that massive stimulus that came from China. What's the currency that has really benefited? You can see is the Aussie, and every time in the Asian session when we see the Chinese market go up, and again just to kind of add on to the numbers, Rob, like last week we were up like 18%. Now we are up another 16. That's about a 33% gain in 2 weeks. That has actually helped the Australian dollar to stay strong. So is that trade continue going to work out? I think as long as those markets stay strong, I think Aussie likely to hold as well. And we haven't heard from RBA to cut rates either. So this is again we're getting this policy divergence. Anybody that's not cutting rates is benefiting from it. Anybody that's talking about cutting rates is hurting. And I think that's what we're gonna pay attention to. I still like Aussie to the upside until or unless we start to see a change in that direction, which I don't see on this weekly basis. Now, Kiwi is a great example of how things turn, and you got to turn with it. As you can see that turn happened exactly like on a Monday or Tuesday when we start to see some comments about that rate cut. And you can see that was a bearish engulfing candle. And after that, we've been just one way down. So Kiwi, again, is one of the currencies that has done really well and has actually come off. So the question is, how does it do when we do get the rate cut? Remember, a lot of that is getting priced in already. So it's going to be in the statement, are they going to be as dovish, or is it a one cut and wait and see? So I think we're going to wait and see what happens. But if you are short, I think it's a green signal to stay short until we get that rate cut from RBNC. Back to you, Rob.
Here's how everything stacks up on the trend score. So it's pretty clear here. Dollar, CAD, Aussie are top in my book. Pound as well. I think that Kiwi is going to be one of the most interesting trades this week. As you said, we've been selling off into this RBNZ. And the market has had to reprice because this 50 basis point cut is a surprise. Let's say they only cut 25 basis points. All of a sudden it has to be repriced again. Or let's say they cut 50 basis points, but then they say we're not doing anything else after this. I think that Kiwi could end up being the best currency for the week, but I don't think you can make that determination until after the RBNZ. So I think this is an interesting trade this week for sure, one that I will be watching. But right off the bat, first part of the week, dollar, CAD, Aussie, easy trades. And then yen short. Yen short is just one of the most clear. That doesn't mean it's going to work out. But when I say one of the most clear, when you stack up all the things you like to see on a trade going long or short, the yen has a whole bunch of them. I've seen times in my life where they had every reason to go down and it went up. That happens. But we're playing percentages here. That's what technical analysis is. It's all about percentages. I think the yen has a really high likelihood of moving lower here over the next couple of weeks. The euro also at a -2, but I'm really focused on yen. Then here's the velocity score of things moving right here, right now. Remember, I don't look at anything in here. So that tells me I'm starting off the week. Dollar CAD on the long side. Yen and Kiwi on the downside, but I'm really just looking at yen. So for me, pretty easy call. Dollar yen and CAD yen are going to be the trades I start the week off with, watching for trades. Well, before we start out with dollar yen, I want to go to dollar CAD because again, we have two currencies that we like on the long side and one on the short side. We want to know, well, what is better, dollar or CAD? The way we answer that question is we pair them up. We pair them up against each other and we take a look at a daily chart. And you can see right now, if I were to make this trade, I would go long. I would go long this trade, which means the dollar is stronger than the CAD at the moment. If I get down to a 4-hour chart, another confirmation that the dollar is stronger than the CAD at the moment. So the first trade you should look at is dollar yen. Let's take a look at just some technical levels here. As you can see, we've got about a month or two of technical levels here. But once we break out above this 149.30, you can see that we've got some room all the way up to this 153, 153.50 area, somewhere in there. So there's a lot of room. So yes, we could see some resistance here. I love to say this. If I had to write the script for the week, I would love to see that on Sunday night, we run into this resistance area. And then we hit our head on it, and we have a 2 or 3 day pullback, and then I get something like a hammer candle here, and then I get a reversal. I would love to buy that. I would love to buy that pattern because that means highly likely to break out and make a run. So that's what I'm looking for. Whenever I say if I could write the script, it's literally what I'm saying I would like my trade to look like. Is it going to do that? I don't think so. It rarely does what I ask it to do. We could see some basing action up here before a breakout, but look, everything in this trade is saying that we are likely going higher. The only question is timing. And I do think you can take a look up to 153 for a target. So there's some good profit potential on this. Take a look at CAD Yen, then I'll turn over to Ankit. Taking a look at CAD Yen, we've already moved through some resistance here. And you may take a look at this CAD Yen and say, I think this is a superior trade because there's no short-term resistance overhead, and I will absolutely agree with that. So I think you've got all the way up to 111.70. 111.70, that's 120 pips. That is about 1.1%. That's absolutely a nice chunk to go after. The only question on this is timing. Where is the timing? Well, we got a pullback and a bounce. We're probably going to get a base or a pullback here. I think you just want to enter off of bases or pullbacks. Ankit, what currencies do you want to take a look at?
Hey, Rob. Well, the first one I want to take a look at is the Aussie Kiwi. Just wanted to kind of point out that correlation there. And if you want to bring it on a daily chart, you can see how throughout the week, how this thing has been also just a one-way trade. Now, the question is, when we do get the rate cut, I do expect this to continue running higher. And eventually, we're going to hit that resistance. So I think it's all going to come down to not the rate cut, but also talking about their statements, how hawkish or dovish they're going to be. So you can see that if it breaks above that 110.50 area, this can easily retest that 111.50. And you can see that this is where this currency pair has lived for the most part. So there's a decent chance for this to kind of focus on. It's also important to focus on this currency chart because, trying to decide between the Aussie and Kiwi. Aussie has been a clear winner, and Kiwi has been more on the downside. Now, in order for us to continue with the Aussie strong premise, we need to see this continue rising as well. So I'm paying attention to the Aussie Kiwi, especially going to Tuesday, and after that, we'll see if this continues or it started to reverse. And if it started to reverse, then we know that there's a bit of a profit taking happening, and we might have to shift our focus between currencies. But yeah, my big premise right now is the RBNZ on Tuesday. With all that big move that happened this week in the dollar and the CAD, I'm robbing the same boat as you. I'm looking for that pullback. I'm looking for some sort of profit taking to really get long into. So their setups are looking good. I think it's a matter of where we want to enter. Things are looking overbought and oversold. We might have to let that cool off a little bit before we can jump on the next leg. But I mean, right now we're in this environment where if stronger economic data will actually result into now stronger the dollar. Where in the last few days or weeks, I've noticed that even though we had a good data, the market just didn't care. I think that rhetoric is going to change. So we want to be buying those pullbacks in the dollar and most possibly in the CAD as well.
And one other currency pair I want to take a look at is Aussie Yen. I know I was active in Aussie Yen this week. Ended up being a decent trade. I will be exiting this by the end of Friday. But starting the week off, I think it's a great place to look at a trade as well. So if you don't really want to do dollar yen or CAD yen, take a look at Aussie Yen. I think we've got just as good a price action here on this one, and we got a nice potential breakout of a high base here on next week. So Aussie Yen is also on my list for trades. Wrapping this up, the market is bullish. Things are running. Yen is falling. That's where you want to be. Now look, the yen is a twitchy trade. We all understand the yen can be tricky at some point. But then at some points, the yen is like the best one-way directional trade you could possibly make. I think we're in that situation. I think we've had 2 weeks of choppy yen trading, and I think we're now going to get paid off to get some nice movement here. But that being said, trust what Ankit said, trust what I said. Wait for those pullbacks, wait for those bases. Don't chase it. There are potentially weeks of yen selling coming up. let's just go grab some pips during that period of time on yen. Everyone have a great weekend, be safe, and let's go make some pips this week. Goodbye.